Donald. New Shiller numbers out on home prices for the month of June, up 5% from a year ago. But is housing overvalued? What about stocks, even bonds? Bob Shiller saw this weakness in stocks months ago. He's joining us, and he's a Nobel laureate, so you know more than we do. Bob, good to see you.
No, but I don't know about that, Dagen.
Yes, you do. Listen, I'm going to quote from an interview that you gave. It was, I think, in early June, late May, and you were talking about the market environment. This time is different because bonds and increasingly real estate and stocks all look overvalued, which even going back to 1929, stocks were overvalued, but the bond and housing markets weren't. Do you see, let's just focus on stocks, are all those markets overvalued right now?
Well, you can't say all markets everywhere, but there seems to be a tendency around much of the world for high-priced assets. It's like a general phenomenon. And at the same time, when we talk about secular stagnation, I think maybe they're related. There's something about the psychology right now.
Well, talk about that, because I wonder about the psychology of the individual in this country that has been through so much in terms of losses in financial assets. Going back to 2000 and 2008, people lost their homes. Could you see increased volatility because today the psychology is different than it even was in 2008? Yeah,
well, the psychology, it's very hard to judge it, because there's so many different people. I do questionnaire surveys to try to figure it out.
I know you do.
So I think that people are generally anxious about their future. And then on top of that, we had this turmoil in the market over the last 10 days or so. And that turmoil has a different sort of edge to it. That it isn't over yet, even though we saw this big rally today. That when you see a big market drop, it scares people for a while.
So when you say it's not over, how long is a while in your view?
It depends on what happens next. After a year, if it's good, this will be pretty much forgotten. This was not, a historic move that would be remembered like 1929. But we still remember 1929, and we weren't even born then.
And we remember 1987, and I was,
right,
wearing jeans and a ripped T-shirt and had bad hair.
I still remember a long walk I took that day, trying to get my head together. What's happening in 1987?
Well, but put this market then in historical perspective. Do you think that stocks are still overvalued here? Do you think that bonds are overvalued? And then what about real estate? Talk about all three of those major asset classes.
Yeah. They're all overvalued. The CAPE index that I've been calculating, last night at close it was 24, so it's a little bit above that. Historical average of only 17. Mm-hmm. So now the housing market has gone up quite a bit since the bottom in 2012. It's been a rapid ascent, so it looks kind of bubbly there. And of course the bond market. People attribute that to Fed policy, but there's something else deeper going on, because it's not just this country.
What is it then?
Well, I like to speculate about that.
Go ahead. You can speculate all you want around here.
I have the new third edition of my book, Irrational Exuberance, where I talk about this. I think that right now there is fear of secular stagnation. There is fear of jobs. People looking ahead to their own future are more insecure than, this is all over the world, because of rapidly changing economy, information technology, dazzling new technology. And it has people feeling edgy. What will I be doing in 20 years? What will my children be doing in 40 years? And it encourages people to buy things and bid up their prices generally.
Bob, looking at those asset classes, which one of those do you think, stocks, bonds, or housing, has the most downside risk?
I'm not sure that I know the answer. Right now, I think of stocks. But, I don't have a good solid... Stock market has been more volatile historically, and we've seen this volatility in recent days. I don't know whether it's going to dissipate. Mm-hmm. I'm more worried about stocks right now.
What's the last investment you made? Have you bought a new home recently?
money market.
That's
right.
For real. And you're getting paid nothing, almost nothing.
Yeah, right.
Well, do you think the Fed then does need to raise interest rates? That would help savers, wouldn't it?
Yeah, they should have raised interest rates somewhat before, because we have kind of a bubbly situation. On the other hand, there isn't much inflation happening, and the Fed sees no immediate reason to raise them. They're likely to postpone it if the stock market doesn't improve.
Bob, it was great to see you, as always. Thank you so much. Bob Shiller joining us from New Haven at Yale. We'll see you soon.